Hello, today I'm going to take you on a tutorial which is going to show you how you can do a very detailed long-term budget. So that's going to cover all your living expenses and your income over up to 25 years. So you can do this budget for up to 25 years. It appears very complex, but it's not. So what I want you to do is just stay with me and go through the process. It's probably one of the most important tools you can do for financially making sure that you can fund your retirement and also look at the scenarios. It's comprehensive, and once you do it once, then going forward it's just a matter of fine-tuning. So you can see we're in the home section, your home page here, and it's the budget's kept within Primetime tools and templates, and it's within the Primetime integrated financial budget calculators, and that carries a whole bunch of financial calculators to help you plan your financial retirement and estate planning purposes. Now, if you've already downloaded it and used one of the other tools within the calculator, then it's going to be saved either on your computer or within your filing cabinet. So if you've saved it within your filing cabinet and you filed it in the right place, it's probably going to be in your finance section there, in your budget calculations, assets and debts. Now, I've taken the liberty of downloading one myself, a worked example, so I can take you through it. So now, as part of the tools and checklists, they are spreadsheets. So when you open them, it might show you an Enable Content button. Now, if you see that Enable Content button, you need to click on that so you can move forward. Okay, it's just part of the macro setup within the budgeting tools. So whenever you see that, click on that so you can continue. Now, I've already opened up the budget, the integrated financial calculator here, and this is the start button. You need to click on that and the terms. So the budget planner input sheet will set out all your living costs. That will then feed into the 25-year living cost calculator. So the living cost calculator, it's a tool, but you don't do anything with it. It's really the output of all these other items actually effectively feed into the living cost calculator. So if I look at the budget planner input sheet, what I do firstly is just update it with the latest date. What you want to do is you want to refine these every year. Because your estimates will change, your circumstances will change. Yep. So I'll do that, and then go. All right. So this looks fairly complicated. Lots of numbers. Okay. So what I'll do is I might just reduce it. So I can just show you bits at a time, and then we'll expand on it. So what happens here is all the income and receipts, this is a description, so all the income and the receipts are all contained here. Alright, so all the costs are contained here. Now, these are all pre-configured, so you can't change them. If you try to change them, it'll show you that. So motor vehicles, homes, lifestyle and living expenses, other expenses, and then care costs if you want to look at scenarios for later years of retirement, what that might look like. Okay, so select the master start year. So I've got 2017. The start year can't be before then. So firstly, put your start year in. So it might be, for example, if you're still working, it might be current. Then you can put the amount, the frequency, whether it's monthly, weekly, monthly or annually, the number of years that you might get that income. So you might be 4 years out of retirement, so you might estimate that you're going to earn $5,000 a month or $60,000 a year each year. So the yearly amount will be automatically calculated for 4 years. Interest. So you might have some investments and you expect that you'll get interest every year. So it'll be an annual, you're looking annual for 25 years. So that'll calculate that out for 25 years. So you go through that one by one and work out how long you might that might go for. This is what we call the first tranche or the first cut. So rates and taxes, 2017, you can see we expect it's $1,500 a month every year for 10 years. Okay, so $1,500 for the first 10 years. So once you've done all that, then you look at the second tranche. Now what the second tranche is, I'll just expand that a little bit. Okay. What it recognises is that it's not going to be, you're not going to have one amount which is going to be applicable. Just say, for example, you're 60 or 65 and you want to do a 25-year budget. So 60 takes you 85, 65 takes you 90. Okay, so for your working income before tax, just say you've got a staged retirement. You expect that you want to work, maybe it's a family business, you want to work 5,000 and 60,000 a month over 4 years. For the second tranche, which starts in the year 2021, which is automatically calculated, so you might want to wind it back and work another 3 years and wind back your hours, so you might only earn $30,000 for another 3 years. Your partner might be working for 4 years, 30,000, then they might want to work for another 2 years. So you can actually work through your age pension and other benefits. You might be able to get some benefits for 10 years and then you might actually increase your benefits. So after 10 years you might estimate that your benefits will go up for some reason. So you can work out what you think your revenue will be in stages, and the same with your costs. So for example, if you expect to move premises in 10 years, you say, well, the family home's probably going to do us from when we're 60 to when we're 70, then we might downsize, okay? Then you can look at a retirement, it might be a retirement village, and the homes and contents insurance might be less, power might be less, water might be less, etc. So you can actually re-estimate 10 years, you might have 10 years in your family home, then you might have 15 years in a retirement village. And so from 2027 there might be some retirement village charges. So from 2027 you might work out that you've got an annual charge of $12,000 for retirement village charges. So same with vehicles. You might expect to have 2 vehicles for 10 years and you might say, well, when we're 70, 75, I think we're going to be able to get away with 1 vehicle. So then you can cut back your vehicle. So instead of $1,000 a year on registration, it might be $500. So you go through that and you can do a staged approach, and then you might have a 3rd tranche and a 4th tranche. Depends on how you want to set up your budgeting, okay? So your 3rd tranche, we've got entertainment going out, travel or holidays, okay? So we've worked out that we might spend $6,000 a year annually for 10 years. Okay, let's make that $8,000. We might spend $8,000 a year, and then we might spend $3,000 a year. So we're going to wind back our years. So we're going to do 10 years. We might do 10 years. At $3,000, and we might do 5 years at $1,000. When we're quite old, we might not be travelling as much. Okay, so you can stagger that, and you can do a third tranche. Once again, the 5 years, the 10 years, and the other 10 years is 25 years, which takes you to the 25 years budget. So you can make it as simple or as complex as you want. For example, you might want to just try a straight 25 years. Say you're 70 years old or 60 years old. You go, well, let's just do a 20-year, 25-year budget straight. I'm going to stay in the same premises. But you can refine it, and you can make it as complete and as accurate as you possibly can. But there's a little bit more complexity. Okay, you can make some comments as you go. So you might want to gradually wind back over time from the family business. So you can work this through. Once this is done, you can share this with the accountant, the financial planner, or you can work with them to do it. Okay. So the other thing it has is it also has a tax calculation. So you can put whether this is taxable or non-taxable. Okay. So just put yes or no. If it's taxable, you might want to calculate what your estimate of the income tax is. Now that will then calculate the tax into your budget. It'll calculate a tax amount into your budget. Okay. So the same with costs. If you're taxable, if you get a reduction in your rates and taxes, you might get some. You might have some investment costs. So you might say, well, part of that's investment costs, so I'll probably get 20% overall. I'll probably get a 20% deduction on that. You might have some motor vehicle costs that you can claim as part of your lifestyle. So you can work out whether you think it's going to be taxable or not taxable. So fees and subscriptions might be donations, might be deductible. Fees and subscriptions might be deductible. Interest expense might be deductible. So that will, you can have a choice about whether you want to calculate tax as part of that. We're just going to make that no and take that out. We'll assume home premises and there's no tax effect on that. So that's how you use the budget planner input sheet. Once you've completed that, you'll see that will go through into your budget sheet. So you can see there for 25 years, it's going to give you a complete budget of your income, your deductions, your tax, and your net funds after tax. It's also going to show you all your home premises costs, your living costs, and your other expenses. It will show you what your residential aged care costs might be. So you can see here towards the end of your latter years of retirement, when you're in your 80s, there might be some in-care home costs, and there might be some aged care costs, residential aged care costs. So what will that look like? And then you can calculate whether whether you're going to be able to fund your retirement or whether you need to look back on your expending and perhaps prune your expenditure if it's a bit aggressive. Okay. It also calculates everything else in all the other calculators, but they're subject to different tutorials. So you can use this with your planner, with your financial accountant, with your brokers, etc., to work out how well you can fund your retirement. So that is the budget planner input sheet. Good luck and happy retirement. Thank you.